Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we are strapping in for a deep dive on the massive 160-year-old rail titan Union Pacific, ticker UNP. We've synthesized our research captured this morning, October 20th, 2025, to answer one crucial question for you. Is this train building unstoppable merger steam, or is its valuation about to, well, throw it off the tracks? Okay, let's unpack this enormous conflict. Where do we even start?
Well, we have to start with the environment they're operating in, which is honestly a landscape of contradiction. It's confusing.
How so?
Pre-market futures are pointing higher today, showing immediate optimism, which, looks great on the surface. But if we connect this to the bigger picture, many economists are flagging serious concern. They're placing U.S. recession odds as high as 40%.
40%, wow.
Yeah, so it's this fundamental struggle between the sort of daily market sentiment and the longer-term economic risk.
That contradiction makes the sheer optimism surrounding UNP even more shocking then, doesn't it? The excitement seems totally powered by that proposed $72 billion merger with Norfolk Southern and also upcoming earnings on the 23rd.
Right, the catalysts are clear.
And Wall Street reflects this hype perfectly. Our research shows over 59% of analysts rate UNP as a buy or strong buy, and zero sell ratings.
Zero sell ratings.
Given the cooling growth outlook you just mentioned, doesn't zero sell ratings feel, impossibly bullish?
It absolutely does. And that's precisely why our research is sounding a massive warning bell. We call it financial gravity.
Financial gravity. Oh,
basically, that excitement you mentioned is battling the underlying valuation reality. Our deep dive suggests the stock is significantly overvalued.
Significantly. How far off are we talking?
The intrinsic fair value we calculated sits around $193 per share.
$193.
And that $193 isn't arbitrary. It's based on discounted cash flow projections. These reflect, reasonable future growth and lower priced earnings ratios than the market's currently assigning. So with the stock trading near $226, well, you were looking at a premium driven almost entirely by hope for that merger succeeding.
It really sounds like fundamental reality is desperately trying to pull the stock back down to earth then.
That's a good way to put it.
So does the technical picture, the charts, confirm that downward tug, or are the traders just ignoring the balance sheet entirely?
The technical charts are absolutely confirming the downward pressure. It's quite clear.
Okay.
Now, while the stock is currently consolidating, sort of bouncing between $210 and $240, the long-term trend indicators, they are decisively bearish.
Bearish long-term.
But here's where it gets really interesting, maybe even worrying. The momentum indicators. They are practically screaming that the recent upward rally has lost its steam, seriously flagging.
Lost steam. So the volume or conviction supporting that upward push has just kind of dried up, making it vulnerable?
Precisely. We see a clear loss of velocity, a weakening pulse. And this is happening even though the options market is leaning slightly bullish right now, with the 0.84 put-to-call ratio.
So options traders are still betting on upside, but the actual price action is weakening.
Yeah, and what does that mean practically, especially in this high volatility environment we're seeing?
More chop.
Exactly. It means the ride will likely be incredibly bumpy, and any minor shift in merger news, positive or negative, could cause a really massive swing.
Okay, so if we synthesize everything, the mixed macro signals, that powerful financial gravity you mentioned pulling it down, and the deteriorating technical momentum, what does our research conclude for the near term, especially as UNP approaches earnings this week?
Our final assessment, based on all that data, is neutral, but with a bearish bias.
Neutral with a bearish bias.
Correct. The fundamental overvaluation combined with those powerful momentum reversal signals, well, they simply outweigh the merger hype in our analysis right now.
So the question for you listening is, can the bulls defend these current levels long enough for some positive news to actually materialize?
That's the crux of it.
What are the key battle lines then? The levels for the next few sessions we really need to watch.
Okay, the immediate battleground is right where we are, basically the $225 to $230 zone.
Yeah.
Watch that closely. If that breaks down convincingly, the key psychological and technical support level is $210. That's the bottom of that current range we talked about.
Right, the consolidation floor.
But pay very close attention to the major line in the sand, $190.
Wait, $190? That's a huge drop from $226 where it is now. What makes that level so strong? Is it options related?
It is. The concentration of put options down at $190 is significant. It suggests a notable number of institutional players are either insuring against or maybe even positioning for, a full return towards that fair value we calculated.
Around $193.
Exactly, especially if the merger talks falter or the broader market just turns sour.
Okay, that's a critical downside marker. What about the other side, the invalidation level? If the bulls somehow win this fight and take definitive control, where does that bearish bias end for us?
A sustained close above $240. That's the key.
Above the recent range?
Right. A solid move and hold above $240 would invalidate the immediate bearish outlook. It would signal that the market has officially chosen to ignore the valuation concerns for now and just ride the merger optimism higher.
Got it. So it really seems like UNP's engine is currently powered mostly by that market and merger hype, but our gauges, our research warn the train might be running out of track if reality bites.
That's the core conflict.
Keep a very close eye on that tension between the $193 fundamental valuation and the current, say, $226 price tag. That gap tells the story. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.